CEO Ali Ghodsi joins us now in an exclusive interview. Ali, you were sort of, swerving when others were going in a certain direction of saying, okay, well, let's stop spending. Let's focus just on profitability. You said, no, we're still growing. We're going to lean into growth in 2023. And investors responded how?
Yeah, I mean, look, you can't deny the thing that's going on called AI. Everybody's interested in it. Every CEO I talk to, by the way, I didn't used to talk to CEOs a year or two ago, but now the CEOs want to talk to me and they want to know, what should I do? What should my AI strategy be? What do you think about generative AI? We want to double down on it. Please help me figure out that strategy. So there's a lot of interest in it. So I just think it would be foolish if we were forced to not spend and invest when this is going on. And I think that's what the investors are saying in this round too. So that's why we got an up round here.
Aside from the money, which is nice, what do you get out of NVIDIA being an investor here?
A super close partnership. So this started in talks with Jensen Huang at NVIDIA. And, we are the complementary market. We make software that lets you build these large language models, these generative AI models on top of their NVIDIA chips. So doing that really cost effectively and really fast, that requires the software to be working really well with the hardware. So you want these two to be like a yin and yang. So it's how can we really partner together all the way from the hardware that they're building all the way to the software so that you can press the price of these things down, because as you know, there's a huge demand for these chips and there's a shortage of these and everyone wants them. So anything we can do to make it more optimized and more efficient could unlock more supply for our customers.
Speaking of huge demand and limited supply, AI-related IPOs, people are very interested in. How long are we going to have to wait for Databricks?
We haven't shared a date. We will go public when the time is right. I'm a paranoid guy, so we're watching the markets, looking at ARM. Instacart is coming up. You guys have been talking about these. But, we also stare at the floats, and we're going to see how the markets react. And once things are right, we will go public. But, right now, it does look like, at least, for where we are sitting, there's so much demand for data and AI that it does look like the markets are turning a corner. So we're cautiously optimistic.
Should we expect to hear more about you doing some different things with spending? Because a lot of times companies like to get their balance sheets looking a certain kind of way before they show up at the IPO party. Is that going to be an early signal for you?
No, as a founder CEO, I have a long-term perspective, like a 10-year perspective. And the way I think about it is that in every industry, the leaders, every company that's going to be the leader is going to be a data and AI company leveraging this kind of AI technology. So massive market. We got to invest in that now. If that's not what the market's like, that's okay. This is going to be the future. So we're going to continue investing. So, how does that change things? Definitely looking at ways in which we can train more generative AI models for our customers that are customized for their use cases, but also looking at M&A. Are there companies that, if we inorganically grew through them, it would make us even more successful and we could grab more market share quicker. So, everything is on the table for us and we're interested in doing all of those things.
A lot of investors are going to look at Snowflake to try to understand the potential of Databricks. And there's been a lot of attention on consumption and consumption models. What are you seeing in consumption rates right now throughout 2023? It seems like there's been a bit of a pickup toward the end of the year as companies sort of experiment with these models. There's also a lot of new software, AI software coming online from the likes of Salesforce, ServiceNow, we expect. Is that increasing demand for what you're offering?
Yeah, look, last year, GDP dropped in Q1, in Q2, and then, interest rates went up. And definitely we saw people be concerned about TCO reduction. And, they wanted to optimize their spend. We saw some of that. But also the approach we took, the Lakehouse, which helps them build AI, could actually reduce their costs. So we didn't really quite see the same consumption slowdown that some of our peers saw. And then this year, because of this AI, after ChatGPT came out November last year, there's been an absolute awareness revolution around AI. So there's been huge demand around AI. So yeah, no, we've had strong, last few quarters and, consumption patterns look great. I think consumption is interesting because we're the first to see, if things are going down or if things are going up. And, of course, we're biased because we're in AI and AI is hot right now, but there's huge demand for buying more data and AI for every organization on the planet right now. So it's looking good for us.